Hi everyone, I hope you're well. This is CoinsKid. Just going to dive into Harmony One. Thanks again for your continued support and everything you do to contribute towards the growth of this channel here on CoinsKid. It's all good. It's all good. Unfortunately, we have lost this support now. We can't shy away from that we've lost this support. We was conforming to an ascending kind of channel where we was marching onwards and upwards and obviously adhering to that as support, but then you can see that we've actually lost it. And unfortunately, you know, as things do correct, obviously everything else corrects with it. What I want to show you though, okay, just a little bit of future reference, that when you do go up and you make a top, okay, and you do start to come down, always target the previous swing high as a level of support, okay, and you can see right there it literally come down and bounced on it, okay, and started to form a recovery, went up, started to make high lows, brilliant, but then obviously it's rolled over again and broke down. These are good trading opportunities that offer themselves up in all this chop and all this consolidation and this back testing of support. So basically you can see what it's done here. It's lost this key level of support, right? And we've lost that, and what we've done, we've corrected again, and we've actually come down and landed on the previous swing high before. Do you see that? So they're actually really good trading opportunities right there. So what I'm saying is effectively you've found the level of support, you've gone up, but as soon as you lose it, okay, and you fail to stay above it, you've got a nice little short opportunity down there of roughly 12%, okay? So again, if you was to lose this particular level of support, and you can see right now what you've done, you've bounced off it, you've wicked off the previous swing high, okay, and you started to come back up, and right now you're hitting your head on this previous level of support, which is now acting as resistance. Do you see that? So what you do need to see in this recovery for Harmony One right now is you do need to see it get back above this level and start closing above this previous support, okay, because right now it's acting as resistance. So just off the bat, you do need to see Harmony One closing above 0.12,098, because if it fails to do so, it will contribute to the downtrend and it will start to come down and test this new level of support that it's found itself upon down there. Do you see that? And then again, if it was to lose that level of support, then you would start to look at a larger correction on the grand scheme of things, and you would target the previous swing high as a really drastic level of support, which is all the way down there. So we'll drop that in right now, and you can see that if and this is a big if as well, if it does lose this support, and that support is currently just there, okay, so 0.10429, if you do see Harmony One closing below that, then do anticipate that it could cascade and come back down to this previous swing high there. You may see that wick and then get brought back up again, because that would be a whopping from that position there, a short opportunity of around about 35%. I do not anticipate that will happen, but what I'm showing you is that, you know, the price structure and the things that you can look at just to set some targets sort of to go short and go long. What we're hoping for here is that Harmony can get this recovery now, because it deserves it, it needs it. It's been struggling for so long, it's been looking like it's getting a recovery and it's just getting knocked down, because right now Harmony has actually corrected from here to that bottom 53%, okay, that's massive, and at the moment it's sat on a 46% correction. If it was to lose that key level of support at 0.10429, then you would see that whopping 70% correction for Harmony One since its all-time high. And honestly, that's a corrective. That's a bear market right there. I'm not going to lie to you. You only see that in bear markets, and that potentially would be the start of the bear market for Harmony One right there. Because if we zoom out on the daily time frame, you would see that is lost all the EMAs. I'll drop the EMAs back in. Okay, yeah, so it's like what I said to you. If you start to lose the EMAs, okay, especially on the daily time frame, and especially at 55, if you start to lose that and you're taking it over your shoulder, you're forming a bearish cross, then you're looking at a bear market. Not necessarily a long-term bear market, but just a very, very prolonged sort of downtrend, just like it did here. You fell over, lost the EMAs, formed a bearish cross, and you was in a multi-month bear market there, a downtrend. You can see that particular downtrend from the moment you sort of lost the EMAs there and started to sort of pull it down. You can see that lasted until you got a bit of recovery there, where you made the golden cross. That lasted a whopping 126 days, so a very long time indeed. So you can see the effect that would have on Harmony One if it was to do that. But I want to reassure you, okay, that we are in a bull market. So we're golden really, and all we're doing, as you can see, we've fell down, we've wicked down, okay, we've wicked down on that previous swing high, but we've actually been wicked back up, okay, we've been brought back up, which shows enormous strength. When you see these wicks, just like here, the wicks at the bottom, okay, it means that the buying pressure's there, so you've been heavily supported. You've got a nice wick there, can you see that? So you've got that wick that's showing you heavily support. There's a lot of support from, it didn't want it to go too far down, and the bull stepped in and started to pick it back up because they knew they were getting some bargains, basically. So always keep an eye on these levels. There's 55 on the daily. Okay, if you start to lose that and you roll over, that's a big signal, you know, okay, it's not looking too great. And think about my position, because you can see in its entirety, since Harmony One has formed a bullish cross on the daily time frame, it's gone up and it's back tested beautifully as support, and it's never fell through the 55. Okay, it's hardly ever fell through the 20, but you can see here it's just got a little bit overextended. It's hit a long level of consolidation, and potentially looking at sort of going sideways a bit until it can get some of these levels reset. The MACD looking relatively healthier, and you can see the RSI is like literally in the floor. You're pushing down to really oversold. When something gets down that low, it usually expects that recovery. So in my opinion, it's looking relatively strong. Okay, it's looking relatively strong, given the fact that have corrected so much, you know, but nothing I say should be taken as financial advice. But one thing I would definitely look at right here, okay, and target for a full recovery is the MACD, okay? Because look at the MACD, right? Look at the MACD, the histogram. You start to get a bit of recovery, but then you've obviously rolled over again. Once you start to curl now on this MACD and get this blue line curling like that and approaching the orange line, you're going to start and form something called a bull cross, okay, like this. You get that bull cross, that signal is a massive signal that Harmony One is come down, it's reconsolidated, it's reset all the levels, and it's ready to go again. Okay, so do remember that particular target there on the MACD. So that's basically Harmony One. I've given you the levels there to keep an eye on. At the moment, my outlook, I am still bullish on Harmony One. Okay, I am still bullish on it. I just think that it's potentially gone up so much that it just needs to sort of cool down. Okay, because you can see it appreciated from that golden cross there on the daily time frame way back on the 9th of January. It absolutely rocketed up there, you know, 40x. Okay, so you've got to expect some level of concern. You apply a bit of common sense that it's going to sort of roll over, back test support, hold support, which you can see it's doing here. It's holding the support, okay? It's wicked down below the 55 on the daily, okay? But it's been immediately brought back up. So it's holding support, and potentially you're looking at just sort of getting caught up in between the EMAs at the moment, getting these EMAs come together, a bit of an EMA retest before you get that propel and that sort of EMA rejection there of the bearish cross on the daily, and it will just add confluence to the market and the fact that you're just going to march on and breach these all-time highs and make that new swing high that we've targeted for Harmony One. So I'm going to do again, just jump out on the weekly. So again, look how far and extended you are from the weekly. Always zoom out. If in doubt, zoom out. And you can see, you know, you are really far away from the 20 EMA on the weekly. You're hitting a longer level of consolidation than anticipated, but you're still golden. So I just want to reassure you that, you know, everything's still good for Harmony One. Once you start losing the EMAs, especially even now on a weekly, once you start falling through them, that's when you sort of think, whoa, okay. And again, on the daily, the 55, if you start to roll through that, then you are looking at that larger correction on the grand scheme of things. But I think what we're going through here, we're in a bull market. Okay, it's a swing high, swing low, swing high, swing low. I think once we get through all this, chop, and we're going to make these new swing highs, taking us up to that particular level there for Harmony One. We are in a bull market. I'm going to remind you of that. We are in a bull market. So far so good. Unfortunately, it's breaking down, but you know that's what the market does. It tries to shake out the weak hands, so to speak. Okay, and this is why I'll always show you these signals, because people see it going down and people see it collapsing and they worry and they panic, and you know they're selling, and then when they see it pumping back up, you know, you've got people that are selling down here, right, that bought back up here and selling down here, and now look where it is, and they're tempted to buy back in again. That's the psychology of the market. That's what it does to you. It shakeouts the weak hands. Okay, so remember, always take profits where you can, especially on overextended EMAs. That's one lesson that you'll learn from this channel. Okay, whenever you see overextended EMAs, take profit, especially on the 4-hour. So that's Harmony One. Hopefully we've bottomed out here, okay, and we start to march on and take out this recovery and create this recovery for Harmony One so far. Again, you've got your breakdown targets, and I would imagine that if we did lose that, you would see that big further correction down to that level there, which would look relatively bearish on the grand scheme of things. So do remember, we need to start closing above this level of here so we can backtest this as support now, instead of getting caught down here as a level of support and a level of consolidation contributing to the downtrend, and eventually potentially seeing us fall out of this level of support down towards this level here. So that's Harmony One. Do take care, everybody. Stay strong, stay safe, and most importantly, stay tuned. And I will keep you updated on Harmony One, and catch you tomorrow. Bye bye.